All right. Today is June 19th, 2024, and I'm going to be talking to you guys about what bias is, what narrative is, and yeah, let's get right into it. So, what is bias? Bias is the anticipation for prices to move in a certain direction for a specific amount of time. So you can have a daily bias, a 4 hour bias, and even like a 15-minute bias. Like, what is this 15-minute candle going to do? So having a bias can be fractal, like as I just stated, it could be a daily bias, a 4 hour bias, a 1 hour bias, and a 15-minute bias, or like a session bias. And every time you think about bias, you want to ask yourself, hey, what is prices doing currently, like at the moment, and why is it going in that direction? And when will your bias slash objective be completed? So that was the first point. My second point is you want to view bias as it's the same thing as narrative. So think of prices as like a story. It's like prices. It's trying to tell you what it's trying to do. So like if you see a fair value gap and prices starts beginning to retrace into it, like that right there is a storyline. So prices made a big expansion move up. We created fair value gap. And when prices is retracing, that just means that hey, we want to fill in some inefficiencies, and maybe if we can get a reaction to this, 30-minute fair value gap, and we hop onto the lower time frames and we see, a displacement away from it on the lower time frames, then it's telling you that story, like it's a story, and you want to see it as like if then statements. So if we retrace into this fair value gap, then we should expand from it. But if we don't respect that, hourly fair value gap, then we're going to go lower. You know what I mean? Like if then statements. Think of it as if then statements. If we don't get a reaction off of this, or if we do get a reaction off of this, then this high should be taken, or then this low should be taken, etc. And confluences that will help us establish a bias is knowing where the existing liquidity levels are. So when I say liquidity levels, I'm talking about, you know, we have London highs and lows, Asia highs and lows. So basically those are session highs and lows, and we have daily highs and lows, weekly high and lows. Um, Another confluence that can help us, understand the story more is if we're disrespecting, a certain PDO rate. Are we closing below, a bullish fair value gap, or are we closing above a bearish fair value gap? That can help us, understand the narrative as well. And the third point is you want to ask yourself, like, what is this next 4 hour candle going to look like? What is this next daily candle going to look like? Etc. You can apply that throughout every single time frame. Like, what is the 15-minute candle going to look like? What is the weekly candle going to look like? Or what is the monthly candle going to look like? As traders, we want to trade the expansion of the weekly range, but not every week there will be like probable conditions on the higher time frames. So that's when we can utilize one of our advantages as traders is we can go onto the lower time frames. And if we have low probabilities on the higher time frames, we can hop onto the lower time frames just to find that a small piece of that overall consolidation on the higher time frames. But because we're on the lower time frames, we have to understand that hey, we can't shoot for the stars. We gotta shoot for just this, and take a small bite out of whatever range we're in that higher time frame. So for some examples of bias is, so we're looking at the hourly NQ chart, and this is during April 19th, 2024, I believe. Yeah. And you can see here, we're actually, we're having a pretty big sell-off here. So we had displacement candles on the hourly time frame. So we had this hourly FEG here, and we close on this hourly candle, and we just created another hourly FEG. So just looking at that, for me right there, hey, we're we're overall bearish. We're closing below bullish fair value gaps on the left side here, and we're just displacing lower. And I'll show you guys on the charts after this, but we actually tapped into a daily FEG here, and we started displacing away during the New York AM session. So this is when this is when you have to understand that bias is fractal. So on the high time frame, on the daily time frame, we're going to go lower. We're attacking previous day lows, right? But when we hop down into the hourly time frame, and we're looking at the current hourly candle right now. So this current hourly candle, and we're thinking, okay, when should we go lower? Should we go lower now after this candle? Should we attack this candle's low right after this candle closes? Or are we going to retrace into this hourly FEG? Bias is fractal. This is something that you have to understand, is that it's fractal. And even though we do have a higher time frame narrative that we're going to go lower, we're going to attack previous day low, that doesn't mean that that you cannot take any long setups. So looking at this hourly candle here, we can anticipate for us to retrace back into this fair value gap, correct? Just looking at the open high low close here, we had a pretty big wick on the hourly candle, and it looks like we might retrace back into this FEG to maybe continue lower. We're not too sure yet. So I know here hourly close is a big wick, meaning prices are likely to retrace back into this FEG, right? So we're on the hourly time frame, right? We want to drop down to even lower time frames, like the 15-minute to the 5-minute and sub 5 minutes, to see any supporting ideas of us to attacking. You want to find supporting PD arrays on the lower time frames that support the narrative, the bias that we're going to attack the previous hourly high. So on the next slide, we are on the 15-minute time frame. So on the 15-minute time frame, we do have a 15-minute FEG. We close above a 15-minute SIBI. So what is that telling you right there? That the confluences are so that we close above a 15-minute SIBI. We should have respected the SIBI to continue lower, but however, we did not. And we created our own 15-minute BISI, buy side imbalance, sell side inefficiency. So when you see this BISI right here, this is telling you, hey, we're strong right now, as of right now, and prices are most likely going to return back into this previous hourly high instead of returning back to the lunch lows / previous hourly low. Right? So now we want to go on to the lower time frames to find an entry that will support the idea of us attacking previous hourly high. So notice here, whenever we created this displacement candle, we didn't retrace back into the hourly high yet. So our objective, our bias is still in play. We haven't reached our objective yet. See? So we went up, we kind of missed it by a couple points here, and we retraced back. We want to catch that retracement back into the original objective that we have here. And if you want, you can even go onto the lower time frames to even target this FEG to go higher, but that's a lot. So like I said, so we went up, we didn't take out previous hourly high yet, and then we retrace. So we want to catch that move down to the 15-minute time frame, or 15-minute fair value gap. So we go onto the 1-minute time frame, or 5-minute, 3-minute, 2-minute, you know what I mean? So prices retrace back into the 15-minute fair value gap before taking out previous hourly candle high. Notice the bodies respecting the consequent encroachment. So that's another tell sign that, hey, we're bullish as of right now. our objective, our current objective, is to go higher on the lower time frames. So we go on to the 1 minute time frame. I did not have the 1 minute time frame on here, I guess, but okay. So sorry about that. So on the 1 minute time frames, we can see that actually I can just show you here. This is on April 19th, I believe. Yeah, April 19th. So sorry guys. April 19th. All right. So April 19th. Here's a sell off right here. So on the 1 minute time frame, so on the 1 minute time frame here, you can notice, hey, price is retracing back into this 15-minute fair value gap right here, and we're also going to be in equilibrium of this range, discount of this range. So you can just take an entry at equilibrium of this range to target previous hourly high, and that's it. You don't want to be targeting any more than that. You don't want to be targeting any we're gonna completely reverse and take out this high right here, and this like I said, we have to keep in mind, one of the things that when I first started trading is that I see these micro these smaller time frame setups and structures, and I have my targets way too it's way too, like, I'm shooting outside the ballpark. I'm not even within the the little space that I have to work with. I'm asking too much. I have to allow the markets to, I have to respect what the markets are trying to give me, and I can't be trading what I wish the markets to do. So like, I long here, and humans are greedy. We want more of everything, but the markets don't do that. So like I said, our overall objective right here is just to take out the previous hourly high. So all your contracts, everything should be taken off after we reach this previous hourly high and the retracement back inside this fair value gap. So bringing it back to understanding what bias is right there. So like I said, bias is fractal. Notice how on the hourly time frame, on the higher time frames, such as the 4 hour and daily and hourly time frame, we're overall bearish, but because of the lower time frames, we can take a long setup because prices allows that. We're not going to continuously drop. There will be times when we want to retrace, and you have to understand that, hey, you can long here, but we're only retracing. We're not completely reversing. You know what I mean? So that is that's the one key thing that I want you guys to understand, is that bias is fractal, and that you don't want to squeeze something that's not existent. Take what the market gives you, and don't project your ideas and wishes onto the market. So after we retrace back into this hourly FEG here, you want to see, hey, what will prices do? So if prices retraces back into that hourly FEG, this hourly FEG here, will we continue lower? Will we respect this hourly FEG, or will we continue higher? So on the next example, I will show you what will happen. So I want to go over here. So as day traders, we must be nimble. One of the attributes of the markets that can be both beneficial and harming to us as traders is the intraday possibilities. So when I say intraday possibilities, that's just understanding that objectives, bias, and narrative or fractal. You have to understand why prices are doing a certain thing. Why should prices be retracing here? Are we retracing here? And we have to set our objective to what the market gives us, not to what we want the markets to give us. We have to be objective and not subjective to our emotions. We are provided tons of setups per day because of how fractal the markets could be. However, 90% of traders still lose even though we have tons of setups. The X factor that will help us find consistency and profitability is the ability to follow our rules and to understand what the current objective of price is. Like I said here, in this example here, I know that we're probably only going to retrace because the overall higher time frame narrative is that we're going to go lower, but on the lower time frames we are provided a setup to go higher just to go lower, if that makes sense. We are provided a setup to go higher to go lower. Now let that resonate with you there. So before taking any kinds of trades, you want to ask yourself, hey, what is the objective of my trade? Like, are we going to attack London highs? Are we taking out previous day low? What is my objective? You know? So in this next example here, it's literally the same day. So we priced higher on the lower time frames, so we retrace back into that 15-minute fair value gap to help us retrace on the higher time frame into a hourly SIBI. So like I said, if then statements. All right, so listen. So once we retrace into this hourly SIBI here, if we get a respect to this hourly FEG, then the higher time frame narrative is intact in that then we should continue lower to attack previous day low. So we retrace back into the hourly FEG, and then we had a displacement away from it. We displace with this, fair value gap here, and you can see it. You can notice it on the 5-minute that we had displacement. So we retrace back into the hourly FEG, and we displaced away from it. So overall narrative right now on the higher time frames is that we're bearish in that we should continue to attack previous day low. So now we're aligned with the higher time frame narrative. Lower time frame is also aligned with the higher time frame narrative. So after retracing to the hourly FEG on the 5-minute here, this is the 5-minute. We displaced lower, we created a fair value gap. We closed below a 5-minute, bullish PD array. We closed below it. That means, hey, we're disrespecting the opposing PD arrays, and we had a market structure shift. And in my market structure shift video, you can tell this is the first stage of accumulation, or second stage, I guess, accumulation, whatever the last stage of accumulation. We went up, went down, and when we retrace back into this FEG, this is an accumulation stage, and then we took out objective, and then we had a reversal. We had a smart money reversal here. So first stage or final stage accumulation. We tapped into a higher time frame PD array, and we had market structure shift. And like I said, market structure shift usually occurs at a swing low that is inside of a fair value gap. All right. So after we see that, hey, we're starting to build bearish structure here. So what I mean by bearish structure is we had a swing high, swing low, higher high, lower low. What is that pattern? It's a breaker, and your breaker should be the lowest down close candle on whatever time frame you're on. So since I'm on the 5 minute time frame, this is the lowest low, and this is the, and you want to take the low and the high of that candle, and it should be a down close candle, and you should mark that as your breaker. So I marked out, hey, 5 minute breaker here, and we're aligned with this higher time frame narrative. Keep that in mind. Our higher time frame narrative right now is to take out previous day low. So now we can go on to the lower time frames to find our entry, because the 5 minute confirmed that, hey, we're probably gonna go lower here. Not every trade is guaranteed, but with the confluences and with the confluences, it adds to your confidence, and once you have enough confidence, then you can use that confidence to give you a little boost, that, hey, I'm willing to take this risk. So we go on to the 1 minute time frame. So on a 1 minute time frame, where within that 5 minute breaker, we have a pretty large 1 minute fair value gap. We actually are starting to respect bearish PD arrays on here, so we respected this large inefficiency as well. The SIBI right here, we came back into it and we displaced lower. We had fair value gaps here. And then since we didn't take out previous day low after displacing away from the hourly FEG, we can take the entry when prices retraces back into the 5 minute breaker and this 1 minute FEG here. So prices allows us to set up. We take our entry at the FEG that's within the 5 minute breaker and the 15-minute IFEG too. And then you just let prices do its thing. So prices start to continue lower. We take out previous day low. And with that, that's like one setup, one little example of what bias is. You can apply this everywhere, every time frame, like every time frame. If you guys want to look at what the hourly did, so basically that day we retraced back into a why is it not? Sorry, 2 minute time frame. Why is prices being wonky right now? Is it being wonky? I don't know why it's not showing me the FEG. So yeah, so we had that big displacement candle here. Started displacing away from key level, and yeah. And we have to understand that on the higher time frames, on this example that we were going lower, but with the first example that I showed you, when we went higher here, that was the lower time frame, lower time frame objectives, and the second trade was with the higher time frame objective. So we can't target like a complete reversal with this long trade right here, but with this short trade, we're aligned with the lower time frame, higher time frame, and everything was aligned. And it's up to you as a trader if you want to trade intraday scalping. So this is basically intraday scalping right here, and this short trade was more of a you're aligned with the higher time frame. So I would say this is more of a intraday trading, not scalping. But yeah, I think that's probably all I have for bias. Key points is that I want to break down again is that bias is fractal. You have to understand what narrative is. Always have an objective for every time you trade, ticket entry. You must understand what your objective is, and yeah, I think that's gonna be all for my bias video. I hope that helped you guys, and I'll catch you guys in the next one. Peace out.